Okay, hello everyone. It's Michael Baltos here from Orderflows.com, and this is the Orderflows market analysis from Friday, March 17, 2017. Before I get started, a brief disclaimer: this presentation is for educational and informational purposes only, should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Tools that I use in this presentation are the Orderflows Trader, the Baltos Flip, the Baltos U-Turn, and the Baltos Transition. If I got time, I'll pop in a couple other ones. But real quick, first up, I'm going to show you this new indicator that I've been working on for a while. It's called the U-Turn, and it's something that it measures areas in the market where buyers and sellers, I don't want to say buyers and sellers contradict each other, but it's looking for turning points in the market. People always say, don't try to pick highs and lows, and this isn't something to pick highs and lows. Rather, it's picking areas where the market's turning, right? I always like to find areas where market's turning, and I use the Baltos U-Turn to help me find the areas where market's turning. Now notice it's not picking every single turning point. Going back to 7 in the morning, you got a signal here up to this signal here. Now this is 3-range chart, so it's moving a little quick in some areas. Like this one is moving pretty quick. Then you're catching this next swing high here. Notice it doesn't give you a buy here. People think that, hey, order flow analysis should give you every single turn in the market. No, sometimes, the markets just make its natural curves in the market. I'll say turns, but, the market fluctuates, right? Markets exist to facilitate trade. And, so you're going to get orderly transitions from, demand-driven markets to supply-driven markets and vice versa. But there are times where order flow will signal out turning points in the market as it's happening. And this is an indicator that we've programmed to help find those areas where the market is just sort of stopping and trying to turn around. Now you'll notice, here, this trade didn't work out. Okay. You had one nice winner and another nice winner here, and these negligible. And that was it on the U-turn for that day on Friday. This was the Bunds. Give a signal. You had 3 signals. This is also the U-turn. Give a signal here. A buy early, 7:30ish around there. Went from 148 even up to around the 08 level. Gave a sell. This one didn't work out. Okay, and you should have a stop. Stop you out. This one is at the end of the day. Not every signal is going to be a winner. You're going to have some winners. You're going to have some losers. That's trading. Again, if you're trying to find an area where the market's possibly turning, you're not always going to be 100% right. Again, I'm not trying to pick highs and lows or anything like that, but I'm looking for areas where, you sort of have an inflection point where it's changing, it's turning. Okay, moving on. This is the transition. Transition, it also measures order flow, but in a slightly different way than the U-turn. Again, it's also trying to find a market that's transitioning from buyers to sellers or sellers to buyers. Give a signal here. Again, I'm showing you the whole day. You can see there's no signals there, so I'm not trying to just cherry pick a certain spot out. You can see there's no sells. There's just a couple of buys here. This one started to work out, then it came down here. Market didn't find its bottom yet before starting to rally. That's how it goes sometimes. It's, it thought it found its low for the day, or, at least a swing low, but it still had a little selling pressure in there left before it rallied up. Okay, this one, sort of not going to get into it, but, this I don't think is a decent signal because, I like to let the market take me into the trade. If the next bar can't even break the high of the bar with the signal, you shouldn't be taking the trade. The market's not giving you any confirmation that it's changing. Okay, this next one is the PLC trader, not so much, but more importantly, the flip. Flip is not one that I really talk about, as it's not really designed for all traders. It's really designed for really short-term traders, a bit on the scalping side. Again, you're trading mini Dows, a 5 range, so it's a very quick moving chart. And again, it's a very tight, I'll say tight indicator. It's an indicator designed more for extreme shorter term traders. So you get a buy here. This one didn't work out. Then you got to sell which worked out nicely here, and a nice little buy popped up for a few points. Got another sell here, down in here, a little bit of a buy that worked out a little bit. Again, this one was designed for more short-term trading, people that are just trying to get a few ticks here, there. This one here didn't work out. Again, that's one of those, should you be taking the trade? No, I don't think so, because you know what, you didn't get any sort of confirmation on the next bar. Late in the day, just after the cash close, a nice little trade to end out the day. Now those, these are, again, these are these three indicators here. Boom, flip, U-turn, transition. It's part of my inner circle. Or the way I had a special if you bought the package, but people always ask about it, and I just want to show charts about them before I sort of jump into the normal order flow charts. Not everybody is on board with trading with order flow. Looking at a chart and trying to decipher it. Like, this is a Bunds chart, and I can see here at 834. This is a perfect example on why we should how a market turns. You're coming down, working your way down. You get an area here of some heavy volume, 1600, 2000, on this way down. Look at the sizes of the bids, 700, 400, 300. People, then you get down here, you got a buyer here basically saying, I'll take all that you got to sell. And you notice how this is where the market just happens to make that short-term turn at 159, 52, 53 area, all the way up to 60s. That's a quick 10 ticks right there. Then again, you got, whoops, you got some other things here. You had a 3 in a row. I do like to get a pullback here. It didn't happen, but you kept going up. But again, this was a sign. Here we got ratio. That's what you like to see on a market that's moving. Okay, so the next one I want to talk about is the NASDAQ. This is interesting. This is something you see practically every single day in one market or another, and what it is you're rallying up to your high. This is a 10 range NASDAQ chart, rallying right up into your high. You hit your high, and what you're watching here is the delta, right? The delta is the net difference between the buyers and sellers in the bar, and you can see right at this high, what do you got? You've got a high, you got a divergence, so you have negative delta at a new high, new or equal high, big strong negative delta. Okay, if you're not convinced that this is your high yet, wait to see in the next bar how it shapes up to be. And again, it's more selling coming in. I mean, I could pull up chart after chart after chart of highs that are made with strong negative delta, and then the market sells off. Now, not every time you have that it's going to sell off, but there's certain clues in here that you could pick up. I'm not going to get into all of that, but again, if you're not convinced in this bar, wait for the next bar. Okay, again, more selling. Not convinced yet, wait for the next bar, more selling. What happens? It just keeps going down. The way this market's been, the equities markets have been in the last couple of months, is you get a lot of nice late moves in the day, and if you can, have a reason to be looking to buy or sell, near a high or a low, go for it. Again, this is a low that we made at 10.10. Came down here. You do have a divergence. Okay. Again, it's smallish delta 88. Fair enough. But what's important is you're hanging around these lows, making new lows. But you're seeing some buying starting to come in here, and here. Then here you got the positive delta. Okay, maybe you're not convinced. Then you get to this bar, minus 18. Okay, that's relatively small. 18 lots in some of these contracts, maybe the NASDAQ, that's the difference of one trade maybe. If someone else bought another 20 lots, it'd be positive delta. So, that's what I consider kind of a neutral delta number. Then here you got a nice strong delta. You got a ratio. You got a blue number here that you like. Nice strong delta. And again, you're just sort of hanging around this low. You come down here, you got a negative, positive delta. Okay, here you got a negative delta. But why do you have a negative delta? Is because you've got some strong selling into the bid side here. So I know that, I'm down here at the low. I've got a bar that's turning up. I've got a bullish ratio that's telling me there's some absorption going on in this low area down in here. Again, it's giving me some signs that, the market could start to rally. Then boom, you get this bar here, nice strong positive delta. So I've already got, a few things. I've got a divergence here. I've got some signs of, you know, some volume, buying volume down here just off the low. And then here I got a nice strong positive delta. For me, it's a, you know, fasten your seatbelt, get ready to go. And, you know, what did the market do? It literally rallied over the next couple hours from, you know, from the low all the way up, you know, almost straight, say straight up to our high, but it got up to our high with, you know, just one little pullback. Okay, so the next market I'll talk about is the bonds. You know, it's just sort of to follow up with that NASDAQ, right? I was talking about the NASDAQ where you had the high, you had the negative delta, and it's like, hey, all signs are there that it's going to sell off. Now, you know, not always does it happen. You know, here you run into your highs here around just for 8 o'clock, you know, all negative deltas. You got a divergence here, 641. And it doesn't sell off. It comes back, it makes new high, makes new high. You know, that's, I mean, sometimes that's the reality of trading. You know, you could have the best indicator in the world, you get short, but, you know, if you don't have that, you know, the trade, so to speak, you know, the people coming in behind you to keep the market moving in that direction after you get short, if you don't have sellers coming in to keep selling, then the market's not going to go down. But, you know, what are the signs? Well, like I said, you know, you have the divergence. You know, be careful taking divergences alone. You know, I like to wait to see how things shape up in the next bar. Okay, and what do you got in the next bar? The bar turns up. It's small negative delta of 17. Again, you know, negative 17 is very small. It's a difference of, you know, 1 or 2 trades. Could easily be positive delta if there was just, you know, another 18 lots on the offer there for someone to trade. You know, maybe there just wasn't at that time because this is a range bar. So. But anyway, you know, that's, you know, kind of a bad sign right there. I said, you know, just because you have one bar, a divergence, a new high with a negative delta, you know, don't take them blindly. You know, wait for some confirmation to show up. And you don't get it. And then you just keep going higher. Positive deltas. Goes sideways here. Another new high. Some more new highs. This is a doji bar here. That's why there's no divergence. You know, for me, for order flow, when I see a doji bar, I don't ignore it, but in terms of my analysis, the only thing I really analyze is the delta. Other than that, I don't make heads or tails of the numbers inside the bar. You know, then later, again, you get another divergence here, and it's followed up with a doji. It's one big down candle, very strong negative delta, but it's smack doji on both sides. You know, what can you do? This bar sort of comes back here. You know, then late in the day you get another divergence, which sort of does nothing, you know, as the market's closing. It's Friday afternoon. You know, so this day was kind of, you know, say difficult, but you know, you weren't getting the best reads in the market. You know, we all like days where things, you know, just really fall into place quite nicely. But then there's days where, you know, where things just don't present themselves, you know, in a nice orderly fashion. You know, there's nothing you can do about it. I mean, you can't slam order flow for it. It's not order flow's fault, but you know, I said you can only trade what the market's giving you. You know, just real quick, another short, quick example is a Bund. Again, going back to the Bunds. This is a 15-minute chart. Now, order flow on a 15-minute chart is, you know, it's not something a lot of people do, but, you know, people still look at it. And, you know, like here, you got a couple divergences. What happens? You got this first divergence. Market went up, made a new high by a couple of ticks, and then made the sell-off. So it's you know, it's one of those things, right? You know, market's looking for a high sometimes or a low, and in this case, it's looking for a high, and it just hasn't quite found it yet. You know, it's still got another high to make before it makes that sell-off again. You know, what's important is you got the high, very strong negative delta, still made a new high, and the delta is still negative. Okay, that's not as strong as the first one, but then even the next one, negative delta. You know, again, it's debatable if you should be even trading Bunds at 12 o'clock Chicago time, but you know, it was giving the signs of, you know, of a weaker market. Okay, now real quick, again, this is a 5-year chart. Not saying again, but this is a 5-year chart, and 9 in the morning, 8 in the morning, you had a divergence that failed, right? 850 here. But, why did it fail? I mean, you can see the buying came right back in the next bar. Again, it's just a naked divergence by itself. Now, what I'm going to show you is something that can help you filter out your divergences to find more profitable ones. You get another divergence right here, 921. You got a negative delta. Look how it comes back with the doji. It just goes sideways. Then here, 1056, you got this divergence. Big, strong negative delta. But look at this number, 9.354. Now, if you're familiar with my software, one of the things that it does is I do give you a calculation. That's what these numbers above or below. Below for a up bar, above for a red bar, down bar. So, the bar opened here, closed here. So we put the number on top, for visuals. This bar opened here, closed up here, put the number below because it's a bullish bar, right? It's a green candle. It's an up candle, closed higher than where we opened. So I want to be analyzing the order flow towards the bottom of the bar, just as on a bar that's heading down. I want to analyze the volume at the top of the bar, for either price rejection or price absorption. So here you have a ratio. Not a ratio. Here you have a divergence. You got your new high with a negative delta. And then in the next bar, right, look to the next bar for confirmation. I often say that. What do you got? You've got a blue number, which is indicating a bearish ratio. It's bearish because it's on top. It's a blue number on top. This is a bullish one because it's a blue number underneath. This one's just a normal order flow related number. There's nothing special at this one. But this one, you get it. So it's telling you, hey, it's the type of number. It's what I call a ratio bounds high, indicating price rejection because it's above a certain level, a certain threshold. And what does the market do? The next bar, boom, sells off some more. Again, sells off some more here. Then you reach down here, you've got a bullish ratio, but you've had a nice move from the 117.05 and a half down to 4.5. That's 4 tick move in the 5 years. Okay, the last one I want to talk about today, I don't want to make this video too long, this is the soybeans. Soybeans is a great contract. And I say great contract, I mean great contract to trade. There's a lot of people made fortunes trading soybeans. So don't disregard it because it's not as glamorous as, say, crude oil or anything like that. And, coming down into the lows, making new lows, divergence here, that fail rather quickly. One here fails to the next bar, one here fails to the next bar, new lows. But, look as you get down into this low here. This is information in the order flow that only order flow gives you, right? If you're trading on a normal bar chart, you're not going to be picking up that this market's turning here. And what do you get? So you got this low, you got a stacked selling imbalance here. Even the next bar, you got a still selling imbalance. We're just going sideways here. Haven't been able to break out from this low here at 994.25. But look at the selling. It's quite strong here, minus 596, minus 220, getting weaker, minus 173, it's getting weaker. Now it's positive, it's buying. Where's my mouse? Now it's gone from net negative selling, net more selling, to net buying, plus 268, plus 102, plus 361. So where's your selling pressure? You don't have it there anymore. Instead, you've got net buying pressure coming in. And what does the market do? It rallies off that low. Again, this is only information you're going to get from an order flow chart. So if you're not using order flow charts in your analysis, I mean, you're just leaving a great tool on the table. It's a nice move. Say you even get long from here, 997.5. Way up here. It makes a move all the way up. It comes down a little bit. 999. Still just sort of hanging around there. A late move, right before the close. So, that's a nice 3-cent move. Could have got, at least 2 cents out of the move. But, 2 cents in the soybeans is already $100 on one lot. So, 2 cents in the soybeans is like 2 points in the S&Ps. And you don't have to fight all these stupid algos and all this stuff that's going on in that market. There are algos that trade in the beans, but it's not as prevalent or intense as it is trading the S&Ps. So again, thanks for watching this. If you want to learn more about trading with order flow and the software used in this presentation, visit my website, www.orderflows.com. So thanks, and see you on the inside.